This video is brought to you by Blue Guardian, the only prop firm that protects their traders.
So within that last selling volume, we have this little repricing right there. So that's why I kind of have two levels, more precise level within this overall level. But anyways, we can see we haven't come into it yet. I have those two levels there. So what this could be, and what I would like to see, is this being a buy side liquidity run. Next week we come back down, take sell side, and then go long. So sweep the buyers, sweep the sellers, and go long. What is that? Pause the video and tell me what that is called. What's going on, ladies and gentlemen? Welcome to this week's pre-market analysis video. I hope you guys are doing amazing and had a great trading week this past week. We have a lot of great setups yet again. I'm going to be going over all the new ones that I see, all my directional biases, and everything that played out that we talked about from last week's video. We had tons play out. So guys, if you are not following along with this pre-market analysis series, please make sure you are doing so. Write down notes, write down these levels. You're not going to want to miss out. I'm giving these day in and day out to my VIP community, and then week in and week out to you guys here within these pre-market analysis videos. So of course, if you guys resonate with this strategy and want to learn more and want to receive my complete guide step by step, feel free to head over to my website, arielfxtrading.com, book a free call with me. 10, 15 minutes max. Just want to talk to you about how we can best help you if we can to begin with. And if we can, then we'd love to have you on board. And if not, no worries. We'll send you on your way and provide you free of charge with our trading plan.
Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
All right, guys, so let's just get right into it. We're going to talk about the pairs highlighted in red. We have AUDUSD. So today was NFP. I usually create these videos upon market closure on Friday to give you guys time to watch these videos throughout the weekend. So today was NFP. We did not have an insane movement, and that's because we had already priced in significant movement from the prior week and the beginning of this week as well. We can just see we collapsed last week, we collapsed this week. So we're pricing all of that in to the market with increased rates that we saw with the CPI news that came out, Fed funds rate, all these news events. When we increase rates by 25 basis points, again, that usually strengthens the dollar. However, we are coming into higher time frame levels on the dollar, and I am looking for overall weakness. Higher time frame, we are still bearish on the dollar index, and we are coming into these very sensitive regions of price. All right, so we did talk about this level last week. I'm just going to highlight it really quick. That level of supply, boom. So if you took advantage of that, congratulations, you have made profits. If you took advantage of the longs from these two levels that we discussed as well, then congratulations, you are in profit as well. So guys, you are not going to want to miss out on these levels. I talk about these day in and day out, again, with my VIP community, and then on a weekly basis with you guys as well. So let's just first start off by going over the higher time frame. Now, we came into our last selling volume. This was the volume in which price finally made the move back up to the upside after mitigating our prior level of demand. Now, why do we build liquidity prior to coming into levels? Now, this is very, very important so that you can discern whether a level is valid or not. Usually, I would say most of the time, we build liquidity prior to coming into valid levels. Why? Because if the institutions are going to be taking price a specific direction, and if they're going to be involved, they need other people or other groups of people, aka liquidity, on the other side of the market, right? So if they're buying, they need someone to buy from, meaning they need someone to sell to them. So if everyone is buying prematurely here with this trend line or equal lows or whatever, building liquidity, they're placing their stops below the lows. Therefore, if they're buying, they're placing their stops here. That means when prices run and hits their stops, they're forced to sell back their position to the market. Because if they bought it, let's just say right here, if price keeps going in the opposite direction, they want to get out of the trade, aka the stop loss, so they have to sell back the position at a lower price in which they bought it from to begin with. Imagine a pair of shoes. You bought it for $100, and then the cost of shoes are continuing to fall and fall and fall, and you're like, okay, I just want to get rid of my shoes. So you sell them for $80. Well, you had to sell back your position, quote unquote, to the overall market that's buying from you. So someone bought it at $80, you sold it to them at $80, but you originally bought it at $100. That's what creates that loss. So same thing here within the Forex market. That's what creates the loss on your trading account. So when you sell back your position to the market, for instance, now there's liquidity so that someone can come into the market and buy it at that price. Therefore, we create liquidity prior to levels to free it up. Therefore, now the contracts can be placed and now the real move can occur. So that's sort of how supply and demand works in the exchange between buyers and sellers in a market. So we had this trend line. The only reason why I have trend lines here is to show where retail is likely to get in and out. And that helps me with my smart money biases. Okay, so if retail is buying with this trend line, and then we break the trend line and we retest it, we start to fall and then price rises. That makes sense because retail is probably selling upon the break and retest. That's what they're taught to do, and that's why they continue to lose and blow accounts. So we come into our higher time frame level. That was our last selling volume, sell to buy. That was really right here our last repricing event. So 6,520 psychological level and 6,560. Again, creating liquidity, create equal lows. We come into those equal lows and mitigate those two levels in which we called out, and then we're starting to rise. I expect next week to be dollar bearish, so XXX USD pushing higher. But again, it could surprise us. Who knows? We'll have to see. This is just based upon my confluences, and nothing is 100%, but it gives a highly probable setup. So we've already had multiple drives to the downside. We've already had our 3 drive cycle. We had our 1, 2, 3 drive. Well, actually, we kind of had 4. That's 1, 2, 3, and 4. But anyways, we have buy side liquidity here, equal highs. I want to go attack those highs next. So dollar weakness is what I expect, and I would like to see higher prices. CADJPY. So we are entering into an interesting level of demand. Now, price is going to close here in the next couple of minutes. So what I would like to see is all this buy side liquidity run. Because last week we had a crazy liquidity run to the downside. We had an accumulation. We took out this low and these equal lows over here. We can see that that wick took it out just by a couple of pips, but that is a liquidity run. And then we made a move to the upside, creating that higher high. So this is our last repricing, that selling volume that failed to generate the lower low below that low. Why is that important? Because if we're making lower lows and lower highs, lower low, lower high, lower low, lower high, lower low, lower high. We failed to make the lower low and instead we made the higher high. So that will flip from supply to demand. So that's really where we're looking to take it long. So I'm hoping that price gets into that level come next week. I'm going to be patient. Obviously, I'm not placing any new positions because it is about 5 o'clock on Friday. So I do expect further upside. CAD Swiss franc, I'm actually not going to discuss that. I really don't see much on it. CHFJPY, I would like to see further upside on CHFJ. So we can see a theme here with the dollar weakness, and we can also see a theme here with XXXJPY as well. We want these pairs to go long. So again, just like CADJ, we had the huge sell-off, so the liquidity run, sweeping all this sell-side liquidity below each and every one of these lows, and we came into that supply to demand flip here. This is where we created the higher high, the higher low, and then the higher high. We can see the structure. It's very easy to see that, guys. So we came into prior structure. Where did the counter trend break? Well, we continued to make lower lows and lower highs. This selling volume failed to generate the lower low. It did not generate that lower low. And instead we made the higher high, and that's where we had that overall higher high. So we pulled back into that level, and on the lower time frame, we accumulated in price. Lower time frame accumulation. This was during news last week. We had the sell-off, enticing sellers, enticing buyers, enticing sellers again, enticing buyers again. So all of this was manipulation. This right in here, this overall demand level is our last selling volume that failed to generate the lower low and instead made that overall higher high. Okay, so from the 1 hour time frame, we're starting to wedge ourselves. 1, 2, 3. 1, 2, 3 touches. So we're in this wedge. I would like to see a fake out of the wedge, enticing sellers, coming into 161 psychological level, and then 160.5. It's also a psych level. Essentially, 160.5 is that last selling volume, and then 161 is just in somewhere in here within the imbalance. So I'd like to see that, and then the continuation to the upside. EURGBP. So we're in really good profit on EURGBP. We called out this level of demand a couple of weeks ago. So again, most of these levels we call out, guys. I'm not going to say all of them, but most of them that we call out end up playing out if we come into the actual entry points. So that's what I'm telling you. You don't want to miss out on these levels. Anyways, equal lows were run, sell to buy, higher high was formed. We pulled back into this last selling volume that failed to generate the lower low. So that creates the demand. What this line is in here is this is a prior level of demand in here. Last selling volume, we've already been over that plenty of times within prior videos. So anyways, we come back down into that level of demand. We scale into a lower time frame. We start to accumulate. What's interesting about this is that we were wedging, creating that retail wedge. We broke out of the wedge. We retested the wedge. What does retail do? They go short. What happens? We go long. We had one more dip deeper into this demand, and then we start the uptrend to the upside. All right, so that fulfills the accumulation. And then right in here is really what's interesting again. On a lower time frame, let's go to the 15, looks better. We create the Asian range. This is the Asian range here at about 1:30, 1:45 Eastern time. So this is about an hour before London open. We have a fake out to the upside. We break out of the range, right? This breakout candle, right? Enticing buyers, price rolls back to the downside, takes their stops, generates relatively equal lows. We come back down, run the stops right before London or London, New York crossover, and then we make the move in New York session for the rest of the day. Really for the rest of the week, obviously. So that creates that buy to sell to buy. So what we could see is, right, this could be one drive, overall pullback, second drive here. So we create liquidity. I would like to see that overall liquidity run into that sponsored move, that huge buy to sell to buy. That creates the level of demand that we want to see for continuation to the upside, because that's what we're looking for overall. Right, we're looking for that higher high now above these relatively equal highs. And if we go out to the 4-hour time frame, we'll see that that is the last point of buying volume that broke this pullback here to the downside to make that lower low. So now that we have broken structure back up to the upside here, now we're in this pullback phase again. So it's technically counter trend trading, but we still have room to go between this high and then this supply zone. There's still empty space. We still have an excuse to drive price higher into that supply level to mitigate. All right, so we still have plenty of room. So that's why I'm liking continuations to the upside. So pound strength. All right, continuing here, EURJPY. So very similar across the board with all these yen pairs. We had the huge sell-off. So first and foremost, I want to talk about this candle here. Overall, bullish market. With this candle here, we had equal highs. This candle swept liquidity to the left by a few pips. So that's a buy side liquidity run. We come back down, sell side liquidity run. We tap into previous market structure, fill the imbalance, and then we make a huge move to the upside. Didn't break structure, but I think we probably will make an overall higher high. So very similar to all the other pairs, we have two levels, 154.9 imbalance. It's also really where we created this support level for retail. We broke out of the support, we retested it with that wick, and then we broke right back above it. So it's a very sensitive region of price, psychological level. I would like to see 154.9 met for our first entry. If we come deeper, then I would like to see 153.5, and that's really where we had that last selling volume repricing and to fill the imbalance a little bit more. So overall, looking for longs, and you can kind of obviously see the theme here with the yen. All right, EURUSD. So we talked about this level. We talked about a level in here. This, if you look at it from the hourly time frame, it's just an imbalance. If you look at it from a lower time frame on the 15-minute, it's sort of like a little repricing. You can't really see it. It's not very obvious. 1.0930. If I go to the higher time frame, you'll be able to see the structure very well. Higher time frame level, we've come into it. We've accumulated very nicely. We've expanded. We've pulled back. We've expanded again. We've pulled back. So structure, high, low, high, low. Why did we choose these levels? Well, we had the imbalance here, and then we also had the last selling volume that swept this low and that low. That right there is a liquidity run. If you can't see, you can see the low of that is 1.0835. I'm looking up here, right? So look up here when I move my cursor to that candle, right there. 1.08335. Let me go over to this wick. 1.08833. That's a liquidity run. It's lower than that wick right there. Okay, that is technically a liquidity run. So we swept liquidity. We failed to generate the lower low, instead made the higher high, and that's where we made the overall higher high. So we're pulling back into the level. What are we doing prior to the level? Prior to NFP. Generate liquidity. Equal highs, relatively equal lows. Or you can say it's ascending liquidity right here. Anyways, we sweep it. We come into it a second time, accumulate, and then we finally make the move in NFP. So we priced ourselves in. NFP was used as the catalyst after we mitigated the level to then move it in the right direction. And now we have equal highs relatively. So we should be going along overall.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
EURCAD, even though we have technically broken structure, I wouldn't be surprised if we came back down and tapped into an unmitigated level, because these are equal lows. We haven't run those lows out yet. And we have this level of demand in here, this last selling volume that we haven't come into yet. Also 1.4451, if I scale over here, within this last selling volume that finally generated the overall higher high, right? Because this is a pullback, expansion, pullback, expansion, right? That's the last selling volume, right? So within that last selling volume, we have this little repricing right there. So that's why I kind of have two levels, more precise level within this overall level. But anyways, we can see we haven't come into it yet. I have those two levels there. So what this could be, and what I would like to see, is this being a buy side liquidity run. Next week we come back down, take sell side, and then go long. So sweep the buyers, sweep the sellers, and go long. What is that? Pause the video and tell me what that is called. I've said it about 1 billion times throughout these other videos. Type 2 manipulation. For those of you who didn't get it, you need to pay more attention. I'm serious. This is not hard stuff. Type 2 manipulation. We sweep buy side liquidity. We sweep sell side. We go long. What does that produce? That produces a move in the market that we know is backed by the institutions. Now what do we know? If price actually does this, and price is now up here, let's say there's a demand level here. What does this mean? It's valid? 100% valid. Why? Because if this was a buy side liquidity run, sweeping buy side liquidity, attracting buyers prematurely because we come down one more time before really making the move, coming down again, sweeping sell side. Now we've shaken everyone out of the market. Everyone's been shook out of the market. And now we can continue with the overall direction. Now it is almost a guarantee that we don't come below that low. I've seen this time and time again. So that's what I would like to see. Who knows? Maybe that won't happen. We have to be patient. There is no current setup, but I still like these levels down there for buys. GBPCAD, same sort of deal. Relatively equal lows. Many people are like, oh, well, we swept these lows in here, sell to buy. Okay, true. But we have more important equal lows right in here. We have these levels. And what's more important than that, honestly, are these levels of demand in here. This is the pullback, just like this is the pullback. This is the expansion. That's the expansion. This is the pullback. We could sweep buy side, sell side, and buy side again. Who knows? Who cares? I'm still looking to buy from these higher time frame levels. There's a lower time frame repricing in here, right? Because that's a low, that's a high, that's a low, that's a high. If on a lower time frame, you'd see the repricing and you go long. Before we break that structure, we consolidate, and that's where we really break the structure. So these two levels are clear levels of demand. This is not a bottom in the market, in my opinion. I don't care that we're going long now. I don't care if we make a higher high, because again, what this could still be is buy side liquidity run, sell side, buy side again. I'm still interested in both of these levels down here. Okay. The only way in which I would trade this outside of these two boxes is if it's just intraday. What do I mean by that? Well, who knows? Maybe we actually do come into that demand right there, right? We have this sell to buy. We had the repricing there. Maybe we come into it, create liquidity, and then go like that, right? If that happens, intraday, equal lows run, sell to buy. We mitigate here, equal lows run, sell to buy, break the counter trend. If there's a clear demand, well, we can intraday trade it. Maybe overall it comes short into the sell side liquidity to go long again, but at least these confluences met our rules to be looking for buys, at least intraday, right? Intraday, intra-week, whatever. That constitutes a setup. We can't neglect this, but we can still take these, right? As long as our setup is met. Having the understanding that we still have an area of interest below, which is down here. So that's GBPCAD. GBPUSD. So looking at structure, this is where it just gets tricky, just because technically we're still pushing down to the downside. I really don't want to see a lower low. If we get a lower low after this low here, it wouldn't make me happy. just because we've already come into the extremities here. This should be the low in the market. We don't have any more room to go because this is structure here. We really don't have much more room. If we come and make a lower low, then all bets are off, and I'm not going to be looking at dollar for a little while. Anyways, 4-hour time frame, let's look at the structure. Well, we have higher high, higher low, higher high. So where's the higher low? Oh, right in here. So we had 2 levels. The reason why we had 2 is just in case we never got the deeper push. Well, we ended up doing that, obviously. We came into this last selling volume, right? This imbalance, right? This is where the pullback ended. That was the last selling volume here that didn't generate a lower low there. So that's why we had that level. I also had a level in here just in case we didn't come down this far, because you can see we generated buy side, sell side. We took buy side first, sell side second, and then went long. So that, if you scale into a lower time frame, like the 15-minute, there's a repricing on a lower time frame there. And that's 1.27000 psychological level. So I figured that could be a level of interest. We did have a reaction, never had much follow through, came back down a second time, and then we pushed up, but we're still pushing down. I would hate to see a lower low. I don't think we'll have it, but who knows? These market conditions lately have been absolutely horrid. So NZDUSD, same sort of deal. We've entered finally into this zone here at 0.61. We can see that the higher time frame zone was met. There's an area of demand here. We swept sell side liquidity, so we built it up, swept it. We made a move to the upside, failed to generate the lower low, higher high. So what I want to see, 1 drive, 2 drive, I want to see that 3rd drive into the high, all right? Because we had low, high, that's supply, came into it, failed to make the lower low, higher high. So we look at the counter trend in here, and we can see that there is imbalance, right? Buy side imbalance, and then we have our last selling volume that dipped into that demand. And I'm not going to go over all this stuff. We had tons of trades in here. We had 1 right here, and we had 1 right there. So congrats if you took those 2. If you guys have been following us for quite some time, called both of those out from last month, and I think those were in June. Yeah, June 20, end of June. So those pre-market analysis videos. That's what I'm telling you guys. Don't miss these videos. Mark off these levels. Even, heck, test them out for a few months. Right? Place everything I'm telling you to look at on like a demo account and just see the profitability over the next few months. These are not signals. You still have to understand how to trade manage. Just because I say that it's an area of interest doesn't mean it's going to be valid. Because, for instance, what happens if, we miss the level, right? And then we break structure and go like this and start to push up, and then we come back down after price has already been up here. Is this still valid? Who knows? Maybe, but maybe not. So if you're still looking at that and you take it, it still may not be valid. So that's what I'm saying. Like, you still have to do your due diligence yourself. This is just as a guide for the current upcoming weeks. All right. So NZDUSD, we've come into that level. We've started to accumulate, and we're starting to push down now. And the market's closed. I would like to see a continuation to the upside. Will we sweep sell side liquidity come next week, like Friday's low? If we do that, we're probably going to take out the overall low, which I don't want to see, because then at that point, why would we take that out? We've been mitigating very beautifully, following structure. If that happens, then we just have to reevaluate the dollar and just kind of see what happens next. Overall, if we scale into the 15-minute, you can see this is a very beautiful accumulation schematic. This really is great accumulation. So if I go to the VFI here, go to the volume flow, we can see that volume is increasing heavily, but price is still falling. That tells me there's divergence. So that tells me that we've entered into the overall level, we're diverging, we're accumulating, we finally expanded. Yeah, we pulled back into the range to end the day or end the week, but I still want overall higher highs. I really don't expect price to come below that low here. So just something to think about. But if dollar is going to continue to strengthen, then we did come up into that supply level. So if that happens, then we'll just have to reevaluate. But overall, higher time frame still tells me to buy. All right, UJ, to kind of counteract that with all these XXXUSD longs, we're looking for UJ potential shorts for a potential hedge long. Now let me go over the reason why I'm looking to hedge. So overall, we're bullish. We've seen that high, low, high, low, high, low. We've swept sell side liquidity, right in here, coming into that previous structure point. That's why we came into that. So after we came into that level, we scale in, Now we start the uptrend. We're starting to push higher. So that tells me that we're probably going to make a higher high. Naturally. Easy. Very simple. Okay. We swept sell side, sell to buy, reprice, higher high. Called these two levels out, came into them beautifully. Again, called these two levels out. You guys should be in them if you guys are taking these trades, or at least following along. Higher high, so naturally higher low. 140, psychological level. That's where the start of this last selling volume is. Right here, that failed to make the lower low. 140. We also have a lower time frame. I believe it's like 15 minute or 10 minute or something. There's like a little candle in there. 139.5 happens to be another psych level. However, we have made 3 drives. 1 drive, pullback that failed to make the low. 2 drive, pullback. 3 drive. And if you look at the higher time frame on the daily, even though we're bullish, we have reacted from that level of supply. I didn't sell it there. Why? Because we could have easily made a higher high. We're freaking bullish, guys. I looked at this in hindsight. We reacted off that level in hindsight. So now we can use that as a potential confluence if we see an opportunity to short. All right, we can put these pieces together. So we scale in, go to the 1 hour. I'll show you what's happening. Distribution, we came into that level beautifully. Distribution, that's the last buying volume, sell off. So we reacted from that higher time frame level, and we reacted from this higher time frame level. So we're bullish, but at the same time we've reacted from supply. So could we actually turn around and short? Maybe. And in this case right here, we reacted off the spring here, the last buy to sell volume. We came up into it very nicely. It had a reaction. What's interesting about that is we generate liquidity prior to the level. Generate liquidity, buy to sell, kind of reprice, continue. Now we do have some liquidity resting above here, so we could run that out before going short. That's why I have this last buying volume there. Also the imbalance in here, just straight selling. So 143.25-ish. That's something that could happen. Or we just get a little bit of a pullback within here, and then we look to short off again. Either way, where would be first target? First target would be where we're potentially looking to hedge long, 140. Just in case we do go long, that's a good take profit. You can definitely hold for a lower low, just in case we actually do end up breaking because we came into the higher time frame zone. So that's that. Also looking along from here, just in case we go long. So definitely will be interesting. Another piece of advice for everyone who is trying to trade lower time frame is don't be so quick to judge breaks of structure. I know we came into it initially. I know we failed to make the higher high. We made the lower low. But does that mean to pull back and short? I mean, it's tough. From a scientific formula standpoint, that's what I would tell you to do. Because I would say wait for the reaction, wait for the failure to make the higher high, wait for the shift in structure. That's based upon a formula. But if you understand and have experience in the market, trying to take it off of this swing point here wasn't smart. And could I tell you why? Not really. Why? I don't know. It's sort of intuitive. There's really nothing in here to tell me to short. Really what I like the best is if we were to go like this, that. Why that? Because that signifies a liquidity run to me. Maybe there's a repricing here. We come back down, reprice short. That creates the demand, or excuse me, supply. Then we break the real structure, and then we pull back to short. That would be valid in my opinion. So many people try to trade this and get caught up, and then we end up going like that and stop them out. And then the real move happens. So in my opinion, because this was NFP, right? Well, this wasn't. This was yesterday. Liquidity run. We came into it initially, created descending liquidity, bought to sell, sort of repriced a little bit, and then we fell again. So clearly we're now starting to shift to the downside, at least into 140. That would be our higher time frame objective. So either, and this is really where I don't really want to be trading. I'm not just going to short off from somewhere in here just because we could easily sweep this buy side liquidity because this is Friday's high. So we could sweep that, come into that level. I would potentially look to short from here, 143.2, 143.25 for sure. Or what I would wait for is some sort of like liquidity run and then something like that to where I could pull back and long, short it again. So something like that. And then look for buys. All right, so that's sort of my hedge opportunity.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.
Couple more. NZDCAD. Now, I don't favor this level in here. I favor this level down here, but just in case price could go long from that demand, I'm going to explain why. So on the 4-hour time frame, we originally back in June, end of June of this year, 2023, we came into this level of demand. Not very obvious, but we had a reaction from it. Technically, we're still bearish, making lower lows and lower highs. So lower low, lower high, we actually came back up into that supply zone I talked about. That's the last buying volume, but really right in here is that last buying volume here. Imbalance, straight selling. So we came up into that level. This also was a liquidity run. 1, 2, 3 touches, buy side liquidity. We could easily fall and make a lower low. However, just like you, Jay, we came into the higher time frame objective. And now since we did that, could we classify this as a break of structure for pullbacks to long? Potentially. So kind of could go either way. So if we scale into a 1-hour time frame, what we'll see is sort of this shoulder, head, shoulder, fake out, and then we kind of faked out again, kind of came a little bit lower. We still haven't broken the counter trend yet, but we're coming into a very key level of demand, which is in here. Now let me go over and show you. Because this is where we came into the level, and this is where the counter trend ended. Low, high, low, high, low, high, low, broken, made the higher high. So right in here is just imbalance, imbalance. So just really anywhere in this vicinity. Didn't have anything too crazy, but we could come back down deeper into 8080. That's the last selling volume. Stops would have to go below the low, but we haven't come into it yet. So we could dig deeper into the demand. Just because we came into it initially doesn't mean we're not going to come back down again. That's just what you have to be careful of. Just because we have a reaction, it's likely profit taking. It could be a shift in structure. We could have easily just reacted from that demand and went long and never turned back. That could have happened. So, I mean, just keep that in the back of your mind, but also keep in the back of your mind that just because we came into it once doesn't mean we can't come back down into it again. We're still maintaining structure. We haven't broken the structure yet. That's the structure, this previous low. We haven't come down and broke the structure yet. So we came down once, came down again, kind of created relatively equal highs. We accumulated, just like we did on Aussie and New Zealand dollar, we accumulated, we repriced, failed to make that lower low, we made a higher high. We have buy side liquidity, so could we come back down into that demand and go long next week? Sure, we could. Possibility, definitely. Because we were in the higher time frame objective region. However, could we have one more short off into 8080, sweep the previous week's low, which is this low here, and then break the structure, make the move back up to the upside? That's a definite possibility as well. So I want you guys to just keep an eye on NCAD. I would like to see overall longs. I'm favoring longs over shorts. I would like to see the structure start to shift. If we take a look at the VFI, let's just see if there is any divergence. And in this case, yeah, there is, right? Volume is increasing, price is still falling. Indication of a potential reversal back up to the upside, all right? So that's what I have for NCAD. Last one, AUDNZD. Haven't moved really since last week. We're still just chopping around, but I told you guys that, we had the mitigation of a previous demand. Why did we come into that? Well, obviously it's demand, but before that we created equal highs, equal lows, buy to sell to buy, that type 2 manipulation. That's the last repricing. So after we created the higher high, we came back down, pulled back into that demand. But of course we built liquidity prior, 1, 2, 3 touches of that trend line. That was the last buying volume before the sell-off. We had a break and retest of the trend line, faked retail out short, went long, created a huge imbalance. It also never reacted off the supply. So we never had the repricing to continue to make a demand. Instead, it was just a blitz right through the previous supply. So that creates what we call an inside supply or inside demand, whatever you want to call it. So that's why we take the previous supply and drag it over. So that would be our area of interest. We came into our 2 levels. Well, really just 1 level, but 2 entries, different stops based upon the different demand zones and the overall low. But anyways, higher high was created, structure was broken. We're now experiencing this overall pullback. We're creating equal lows, so creating liquidity. I would like to see as sell to buy when we have relatively equal highs here as well. So buy side liquidity, sell side liquidity. I would like to see either a buy to sell to buy or a sell to buy. Either way, this level of demand in here is good for continuation to the upside. From higher time frame, doing top-down analysis on this pair, I just don't see why it would go short. I just think that we are very likely to go long, at least up into 1.1240, which is the last buying volume before we made the lower low here. But even so, even though that's supply, that would be first target. I still think we should make a higher high because overall we're extremely bullish. But anyways, guys, that is what I have for this upcoming week. Obviously, stuff will change throughout the week in terms of like intraday setups. So if you guys want to catch all the intraday moves that we send out between Monday and Friday, feel free to head over to my website, Ariel FX Trading, book a free call with us. If we think you're the right fit, we'd be happy to have you on board in our community to where you can be taking advantage of everything we're sending out and learning from us directly. So you not only can you make money while trading, but also learn the skill yourself, and we can teach you exactly how we do that from a step-by-step basis. All right, guys, so have a great weekend and happy trading come next week. Take care.